All right, hello everyone. How's everybody doing today after this nice weekend we had? All right, so it's great to see you all. And I did want to give you a little bit of an update about the new venture. We are very close to launching, and we've been getting a lot of emails from you, so thank you for the emails. Keep them coming still. You do still have a little bit more time to get in on the priority access. So if you haven't yet, just continue to email me at tradingwithjasmine@gmail.com. I do see all of them. I do have great support that make sure that everything gets handled and nobody gets missed. So just keep them coming. Now, we're making sure that all the little details, we know what you want and all the things that are that we're trying to put together. So the team is working very hard behind the scenes, and I will continue to keep you updated as we go along the week, and we will go from there. But it's great. I'm really looking forward to it. I think there's many things that we haven't been able to do before, and now I can really, brighten, open up the world and help, all of you, all of us, just continue to grow together. So that's the plan going forward. All right, so Support is here too with us this morning. So ask him anything you want. He is in the room as well. Okay, let's move on. All right, so for today, our market focus. So what I try to look at in the morning is I try to just take a good look, around the world, as you know. And taking a look at the inverses, it doesn't look like it's giving us a lot of clues this morning. It seemed to me things were holding up pretty well with them, but in terms of where they've moved, they look very range bound to me in all of them. If we're looking at gold, if we're looking at the yen, if we're looking at bonds, everybody's range bound. That could change during the week because we do have quite a bit of certain two ranks coming into. So first, I believe the first one is going to be, is it Aussie? Yeah, Aussie is going to have their rate statement first coming in this week. And then Kiwi also as well, Pound as well this week. So a couple of things that's going to be coming in this weekend. And of course, NFP that is going to end up with the week. The one thing with the Kiwi and the Aussie is, they are very reliant on China, and at the current moment, we are having some sort of a battle going on, and whether that's going to eventually, how the outcome of that, if that's going to directly impact them, it won't be this week, but it's something to look out for going forward because China is a big part of what the Aussie and Kiwi does. So do watch out for that as the news develops, as we go on with all of this continued, to see who to put the blame on with all this. Don't forget the Canadian dollar too at the end of the week, along with during the time of our unemployment report. And you got to know that that's not going to be good. That's just going to be a horrendous number. I think they're expecting, it's just outrageous. So it's already expected on that part, but what other areas of information they're looking for, that'll be, I guess, as we get closer to the week, end of the week, we'll look into that a little bit more. Yeah, to me, what I feel like is, well, we can discuss that as we go along. The smaller time frame, sometimes what it is with the small time frame, if we've gotten far from it, and things have to travel back to it, then the smaller time frame is sometimes I would say, okay, if we have a bad arrival, not take higher time frame. More likely there are going to be turning points. So, but they are also the scariest to take. So let's, we can discuss it as we go along, because I think everybody has different personalities, different feels to it. If I want to say anything, the more mechanical you can make yourself, I would say the better in the long run you're going to do, just because a lot of the mistakes that we make are emotional and cause us to do things that we shouldn't do. That's one thing. And then the other thing is, just it becomes, you spend all this time doing analysis, but then all of a sudden when it gets there, you're a completely different person. So but I do understand people, some people you can't sleep if you put on a trade or if you're in a trade. Some people, and believe me, that was completely me for a long time. Now it's just okay. I know the risk in whatever it will be. But before, no, it was completely different. Whether I knew the risk or if I chose to not know the risk, whatever it is, it bothered me, I would have to get up every whatever, 10 minutes or 15 minutes just to, and the worst part yet is when you bring your laptop to your bed. That's probably one of the worst things to do, because you're half awake and you're saying, whoa, there's a setup. And then you don't even remember that you made a trade until the morning, and you're like, did I really do that? It's kind of like those infomercials in the middle of the night, right? Did I really buy that? But yeah, it goes in that same nature. But let's go look at the charts. And the worst part about it is you miss something, and that happens all the time. I see with people is they miss something, and then they're always trying to figure, and we already moved so much off of the level, and then you want to get in. And it's kind of like, okay, I understand you want a little confirmation, but we move like way off of the level. So then it's hard to, because then you start to get in the middle and things like that. So that becomes difficult too. If we just started, falling, it's okay. Or so, but let's go take a look. Yeah, mobile phone trading. You notice all those online, gambling and everything. Yeah, it's just one tap away on your mobile phone. But let's take a look at this S&P so far. So the S&P, so this is what it looks like on the daily chart. You can see that, pretty strong recovery so far, coming all the way back up near this 3,000 mark. And this is now where we're right below this area where we're starting to see a little bit of trouble right now. And now we're testing. You can kind of see where we're testing right now too, right back down to this daily as well. So a lot of people are looking at today, well, can it break? Because then now we got more room down below if it breaks, right? Or are we going to have a more significant bounce back? So that looks like what's on a lot of people's mind. So let's go and take a look at the little bit small time frame and see what we've got. So the little bit closer 240 zones we held above on Friday. Eventually now we've moved down to the, yeah, those of you that started your trading just by being mechanical and just following, because some people, you'll follow rules right from the get-go, and then you'll notice that you have no problem sleeping. But then others of you who's kind of got used to kind of day trading first, and it's a really difficult to let go of that like you feel like if you don't see it's but actually it's the reverse. If you look at it, and it causes you to think and do too many things. So now we've dropped all the way down. So we had this level here on the 60-minute, which was at 27.68, 27.79. We did come into it in the overnight. We have bounced back, and now we're holding right below this gap so far. So that looks like what's the picture of it. Does the equities at the current moment that have supply up above? Yeah, it has some supply up above. You can see on the 60-minute, on the overnight, the closest area right now is the 28.59 to the 28.67. Yeah, addiction. Yeah, that's interesting. Yeah, word too. It is. You can get very sucked into the markets, but it's not a bad thing. I don't feel like, because that is something that, first of all, it involves your life, right? Your life in terms of what's going on in the world, and of course your monetary aspects. So, out of all the things you can be addicted to, it's not a bad thing to be addicted to. Might ruin some sleep, but hey, it's all right. Sleep is overrated. So let's take a look at now what we have on the, so I wasn't with you last Friday, but it did fall from an overnight area down below. So now what we have is a slight area in between this overnight and this, and so two overnight zones, and then now we have a little area in between, which I'll show you too. So the only thing I see good with that is that it's going to be above your overnight high. So it's two smaller time frame areas on top of each other. That starts at the 28.38 up to the 28.46. And quality of the area, I wouldn't say it's that great, because like I said, it is between the 15-minute overnight and the 60-minute overnight supply and demand. And now this two smaller time frame areas is in between that area. But the good part about it is the zones that are above your overnight high. Then down below, the lower zone is where the last time price hit before it rallied up to new highs. So that area we've had before on a move back up. In terms of really fresh, I would say if you take a look at it on the 4-hour, the lower back up down into the 2600 is where you really start to get places that you haven't been to yet. So you can see with all of this that we've come back to demand, we've come back to demand. So even though we do have some areas in between, I don't think it's truly fresh until we get down close to the 2600, right? All right. So market orders. So market orders, are you meaning you just get into it, or? So I'm not sure if you're saying you're going to place a trade, like so most of the time, unless I know I'm at entry and I'm in. So if I'm at entry, then I'll do a market order, because I know I'm not going to have time to do it. But I'm not going to place a market order unless that would be the case, because I will still wait for price. But if you're saying that if it's before the market, would you put in an order? Yeah. I mean, I'll be honest with you, like before even, I mean, when I started back in, let me think now, 2007, so 2008, the bulk of my trading before Asia and London got quiet, between that 2008, 2012 time, was during Asia, London, and pre-market New York. That was the bulk of my trading. And then, I'd be done even before London closed. Sometimes I didn't even need New York. So it was different then because the volatility was very high all night long. Now you do get volatility back just because of what's going on in the world. But I tell you, after that whole crisis thing, it really took a lot out of the markets, and the volatility overnight completely went to, like very, very low. So it wasn't really worth it in terms of what I was trying to do. So now it's more, and now it's more like a little bit of London into New York and more of a full, it's full of day. You get your quiet times in New York, so of course that's when you take little breaks. But that's mainly it. So it changes. I wouldn't consider always. Well, yeah, there's certain times, if you went through some of my other sessions, you'll know which are kind of the high times, the low times, and which times you want to kind of get in the market, and a lot of overnights, they can work for that session too as well. So sometimes the Asia levels will work into Europe, things like of that nature, right? Yeah. So, yeah. For me, I typically do like limits just because I do like to get prices on. I don't like to like if I did miss it and things really were shooting up, I would rather kind of leave it unless it's just getting out of it a little bit. So I don't like it way out there and then I still try to get in because that's kind of like you're acting on emotion. So I try to stay away from that. If you miss it, you miss it. There's always another trade around the corner. So, all right. So that's the look on the S&P with the SPY. So the SPY, the same thing. It held up for Friday around the 4-hour area, and now you can see the fresher demand zones is going to be coming in closer to this 260, 38, 250, 682. Like I said, we held within these, this demand a little earlier and then has this gap below. So we're kind of in between that right now. And then the lower area is going to be your fresher. The close 5-minute area, like I was showing you in the other one, that is 284.20, 284.94. But the gap you can see is coming in at 289.12, 292.60. And like I said, don't put anything on your charts that you wouldn't take a trade there. There's no point in that. Just put lines on your chart where you believe you will take a trade there, whether you're trying to do a little bit more confirmation or you want to do set forget. Either way, just don't put a lot of lines on your chart that's not going to do anything for you. So in terms of what Joey's saying, if you are doing the futures market, to me is you don't have to wait for the open. I mean, I've done it before too, where I took it off because I said I'm gonna wait for the open, and meanwhile it works out, great. So it's think of it this way. Like I said, people come in to trading, right, at certain times. So you're starting already to get the majority of people coming in pre-market right now. And especially now, right before the open, an hour before, you're going to get a lot more people. So even though it is before the bell, it's technically, you're starting to already get that bulk, right? When you're hitting like 6 o'clock to 7 o'clock, Eastern Standard Time, that's kind of where London goes to lunch, and New York, pre-market traders aren't quite there yet. So you might get a little bit of a slower time at that time. I would still take a trade then. Don't get me wrong. That's the only time I'm a little bit worried about is really if I am looking at things at midnight, then that's the only time, because I know that's the absolute quietest time of all the day. So that's the only time I would say, But right now, even though at this time, I would say it's not an issue. But then a little bit earlier, it can be. But I myself, if I see something I like, I would put it on. Yeah. Like I said, with all of this, definitely just know your risks. And if you go into it with the mindset just saying, I know my risk and it's okay, you have to go into a mindset going like that. Otherwise, you're just going to be nervous the whole time, right? So if you just already take acceptance that that's what it is. And remember, this is you're not going to be 100% right. If you expect to be 100% right, it's not going to work for you, right? You have to be as good on both sides, right? You just got to know that the strategy works, and over time, you're going to, be better on the winning side rather than the losing side. So the strategy works, and that's what it's going to do for you. But you can't expect to be, everything's going to be perfectionist, because that's not how this market works, So this Nasdaq, we've come off of our 240 zone, and we've continued to fall from there. We try to take a little bit of stop at this upper zone, but you can see we're just in between there too as well. So we had to come down to a 30-minute before prices. You can see. So this is where we're kind of hanging out at right now. And you can see it did touch in about 2 times. So I would watch it again if it comes back. But like I said, the 5-minute, let me just see. So that same smaller time frame area above is 87. 88 it starts at, and there's 2 of them on top of each other, and the second one goes up to 88.21. Okay. And let me just see what else in the Nasdaq. The Nasdaq on a so again, the fresher area is going to be coming down. If you really take a look at things, really much lower here at the 7,854 to 7,733. However, I do have let me just see here, 15-minute, that's an overnight. And the reason why, so it's overnight, but the only reason I kind of looked at this area is because it does look like it's below these previous lows. So a possible little bit of a hold for those of you that's looking at day trading and seeing if it can hang into this overnight area. And that starts at 84.98, 84.79. And when you're day trading wise, you don't mind taking either side of things, because you can see, unless you get a really harsh sell off or so, most of the time you are going to have bounces back up to supply and things of that sort. So because sometimes you can't always, while the market's moving, as long as you know where the opposing area is, that's the main thing with it. So like even if you took some demands down here, it's fine as long as you know where the opposing area is and get out before that. All right. So that same area on the Q. So with the Q, same thing. we've fallen off of our 240 zone on the Qs, right? So that area just barely touched. So I will look at it again if we should come back up into the zone. Same thing down below. We just barely touched this. I'm not too as crazy about the demand side just because I see it's really not a completely fresh area inside of here. So, you know, I do like the 30 minutes a little bit better, which is, you know, down closer to this 190 to 190 area. You can see that gap, what it looked like, right? So it came back pretty close to that gap. And then now inside, so it can hold inside of here. It's just a messy overall area. Something like that, I would wait for a little bit more confirmation inside of there if it's going to try to hang on inside of that larger zone. The close 5-minute area, or too small time frame anyway, is up at 214.50 to 215.30. And I think besides that, there's not a whole lot because it's just coming off of that 240. You can see where we are too in general with these markets. A lot of them just hang on to this, right? Just kind of hang on right here. So it's still holding up in this recent run up, but testing kind of the lower borders today of whether it can try to survive, you know, this. I mean, you got to admit, this Nasdaq has come back quite a bit. What it looked to me a bit weak though was the Dow, and then the small cap starting to turn a little bit too. But the Dow does look like it's slightly on the weaker side of things. Let's go to the Russell. Yeah, did that help, Scott? Like you can just see in that messy area that it's not there's not a huge imbalance of supply to demand, right? Because there's so much trading inside of there, right? So you can, you know, a lot of times what it is if the market is either strong or weak, those areas can hold just because the market's just not doesn't have new buyers, new sellers to try to push it through. But in terms of finding a quality area inside of there, just to, like, say if you want to do a set forget, that's what makes it hard, because it's not a clear picture of a supply and demand imbalance. All right, so you can see here on RTY that we have fallen back pretty strongly now to the where we've just muddled around in on this 4 hour. So we've just like kind of bounced back and forth, bounced up and down, kind of hitting the little gap it did and going a little bit above it too as well. So this is where we are with RTY. Down below too, there's not a whole lot of freshness below current price in RTY. A lot of it's been back to already at least once. Above, so I would consider these a little bit better. This one is an overnight that it did not come back to. So the S&P came back to it, but it did not. Where it is an overnight zone, that's coming in at 1282 to 1291. But the day session ones are more coming in closer to the 1308.80 to 1329, I believe, and 1335. Okay. Now you can see too with the IWM, you have also same. Actually, IWM, I don't think it quite hit down. So IWM still has this lower area here at the 120, 130, 119, 20. So that's still, you can see after making that little breakout to come back to test this previous area, that IWM still has that. And now it also has the gap above, which is at 129.95 to 131.60. All right, so that's, oh, YM, let's go take a look at YM. So you can see with YM here, so it looked to me a little bit weaker because it was the first one to kind of take out its close to 40 zone. So to me, it looks like it's the Dow stocks were weaker coming into today. We have some 60-minute supplies. These two are overnight. This one did touch one time into it, but it just barely touched. So since we do have two on top of each other, I believe it's still fine. You will also going to initially have to deal with the gap too as well. So depending on what profit margin you have there, you can see that the gap will be the first area you're actually going to deal with coming into today. Right, the gap above and then the 60-minute down below. That kind of looks like to me where it's kind of sandwiched in right now, right? The 60-minute below and the gap above. That looks like where the Dow is kind of just sandwiched right in between, right smack in the middle. So you may get not a whole lot of profit potential on either side till we start to break one way or the other out of this area. But you more than likely will get some bounces on both sides of that. And then the lower 240 area is coming in at 21,952 to 21,645. All right, and then you can see with the so the Nikkei. So the Nikkei has dropped from our 60-minute zone. So if you, that's a pretty big market there. So if you, I don't know if a lot of people trade it, but you know, depending on where you are, you could pay attention to it more than others. But you can see it's been a pretty huge move down to the 30 minutes demand that we had too as well. So we went from the 60-minute supply down to the 30-minute demand. And now you can see in between what we have is this first area just barely kind of touched. That's at 19,688 to 19,769, and the second area 19,861 to 19,937. So a couple of things with it, you know, this market, it kicks it off overnight, you know, along with Asia. It'll start the fresh day again. However, it's different on, so this week is going to be NFP, right? So that's the non-farm payroll that comes out once a month for the unemployment. And the one thing with this is when that comes out, Europe will be open still, but Asia won't be open. So in that scenario, you're going to have Asia that didn't get to trade whatever is going to happen, if anything major is going to happen on Friday, where we start to get huge moves, and Asia did not get to trade that. So initially when we open up on Sunday with Asia, they're going to have to, you know, try to either make up for what happened or scramble to get, if something is out of balance and they need to, if they didn't get to short, if they didn't get to long, whatever it may be. And so that usually will happen, you know, right the day after the weekend after NFP. And so that's not always what's going to happen coming into New York morning again, because that is something that they're trying to make up from the day before. So for them, it is a little bit different when the weekend closes and then it opens up on a Sunday night again, because that'll be the one day that they kind of miss that whole, especially on a big report day like that. And So it'll be a little different. So it can be a leader in some cases, especially what's been going on with the world, where things affect China first, and so it starts trickling down to all of us. And but in this situation, it will be more because it's after NFP. All right, so that's the Nikkei. Take a look at the DAX also. So with the DAX, where we have so a little bit of a bigger range here with the 60-minute. You can see 60 minutes still higher up at 11:62 to 11:148, and down below at the 10:047 to 9989. You also do have a 15-minute supply coming in right above this gap, two levels on top of each other, starting at the 10,881 and 10,945. So remember too, you also have a mini DAX as well. So I know these price points can get pretty high even on a smaller time frame. So you can check out your FXDM as well. Let's take a look at FGBL, the bonds for them. Okay, so we already, this one already hit. Probably not a whole lot if you trade anyway, but you can see I do this pretty early in the morning, so wasn't quite there yet. And then I guess it did hit a little bit, and then now we're falling. So interesting. One thing is that it does look like the bonds on the smaller time frame is kind of holding, and then that's giving equities a bit of a lift, I believe now. So that's a little bit different scenario than very early on. So that could be telling us at least a little something, because now you don't have demand, more than likely down till the 173.30. So that could take us higher up into those upper supplies in the equities. That's a possibility here going on there. Let's go to our the bonds here. Let's take a look. Yeah, so you can see it's starting to unravel a little bit. We've hit this 240 zone a couple of times in the 5-year. Looks like to me we've eaten through the close demand, because what we've been doing so far for the past week or so, or even past week, we've been pretty much hitting supply, hitting demand, hitting supply, hitting demand. We've gone absolutely nowhere in that time period, even with Fed and all FOMC and ECB and everything. Gone nowhere. And now I do see we are struggling to get back to supply and attempting to now try to take out this close demand. So I would say that's suggesting a little bit more equity strength than anything else. So that's definitely something to watch out for. Let's take a look at the 10-year. Yeah, we're having the same thing all around. Yeah, 10-year, same thing, went up and hit this supply, and now again also having trouble to get back up there too as well. So we are seeing a little bit of weakness inside of, okay. So good thing to keep an eye out on. This way, because if we do start to break some of these demands, you might want to watch out for trying to short too close in the equities if that's the case, right? Because then you want to be a little careful on that. Because same thing here with the U.S. too, right? What we've also seen is that we've continued to rally off of this 240 demand, cannot get back anywhere near the 240 supply, right? And we are starting to really, again, still in a range, but slowly eating away down below here. And like I said, if it starts to break these demands, then I would say, yeah, you want to wait for the higher equity shorts rather than the lower equity shorts in that scenario. And you can also see that the 30-year is weaker than both the 10-year and 5-year and 2-year for that matter. So suggesting that longer term rates are going to be higher than that's looking for what the market's telling you right now of what's going on. Kind of makes sense though. I mean, the Fed doesn't want 0% interest. I mean, President does, but the Fed doesn't. So kind of makes sense that it would try to be higher. All right. So TLT also, you can see also still pretty well off from its 4-hour that we had. So the 4-hour zone that it's rallied back into, now down into the has quite a bit away. Has a gap here. Like, so if you see this, right, you see something like this where, okay, so you can see where this is kind of coming right from here, right? So we have a little demand, we come into it, and we come in, and so when we're kind of having this nice little move up, and then everything's like, okay, everything's great and everything's still moving, and so then you can see they work out fine. What starts to happen though is you start to have some supply and you start to turn itself around, and what you'll notice is these aren't the freshest demands, right? Because these are not the first times really back there. Even though if you're just looking at this, you're going to say, well, yeah, that is, but it's really not. It's all this one gigantic demand area. So that's why when you start flipping and coming back around, these are the first ones that get taken out because they don't have a great imbalance. All right, let's move to some crude. All right, so what we have from crude at the moment is, you can see this 240 demand. This area that we've had, it's still hanging inside of there. Whoops. And now starting to reach this. So this is a bigger picture of things at the moment, right? Crude is rallied off of the lows. It really hit into our eventually did come down to our, I don't know if it's here or the other. I think it's the other one. Let me go to the other one. So you can see it down to our 5-minute zone. It missed it the first time, then it came back, it hit it. Since then, we've continued to rally out pretty strongly from there. And now where we're at is we're right below the overnight. So if you want to break it down a little bit on the overnight, right, this first one comes up to 22.61, and then the second one goes up to 24.06 basically. There is a little 5-minute area that's also overnight. The only reason I looked at it too was it's below all these previous lows. So the time period, it's kind of Asia, so not that great, but you know, commodities do trade overnight, and when we do have news in general, usually you get the most move when OPEC is speaking. That's usually like 5 a.m. Eastern Standard Time. But this is, you know, like I said, things have been moving overnight. So this area is 1623, 1598. All right. And then if we need to, we'll come back and revisit the lower areas should we get more of a move. But right now, we'll focus on the closer ones. Let's move to copper. Well, the only thing with overnight, so if you really don't, I would say, you know, like I said, with me, when I first started trading with stocks and then moved into futures and all and Forex, and that's when I really start to know when all the volume volatility comes in with certain time periods and all. So if you yourself haven't experienced that, what you could always do is just put on the volume on your chart, you know, like in your indicator, just put on the volume, and this way you'll know because sometimes you can just see from the candles, right? When the candles are very spotty and that just shows you that it's just very low volume. So if it's very like spotty candles, that they're not, you know, solid like this, you know, like this, then that just means it's well, sometimes rollover looks like that, but other times it's just very light volume. And then the other way is just use the volume on the bottom of your charts, and you can see where because if a level, think about it, if a level was created when there's very, very low volume, is it really created because there's, you know, people trading there? It's created because there's nothing going on. I mean, so that's the difference. So copper, so we were a little bit late, unfortunately, of course, to get to this one. And of course, that's the one that falls like a rock. But anyway, that was the area when we pulled up and it was already hit it. And so then now it's dropped down to our 240 demand zone that you can see here. We did take one rally out, came back into another rally and still testing it. And then also now has this in-between zone at the 2338 to 2355. You know, if it's so I would say this for all of you is, you know, if you never experience it, it's probably just better for you to do some watching with that first. Keep your plan to just day levels, right? And just do some watching, right? There's no sense in you trying to, I mean, I know in the beginning, there's some people, we all have different personalities. Some people are very anxious and they want to, you know, throw their money in right away. I was definitely one of those people. And then there's other people who can sit forever and not throw anything at it. And, you know, so you try to find that medium, right? But then there's also, you don't want to be wasteful in just, you really don't want to be wasteful. You want to know what you're doing first. So if you have a plan and you don't know much about overnight, just stick with the day session and do some levels in the overnight when you see it, and you know, just map it out. You know, make some marks and just see how it does. And this way, it'll give you some confidence first of all. And whether you want to start trading or not, or if you're doing fine with the day session, just stick with the day session. You know, you don't have to force anything. But if you're doing longer term trading, more than likely a lot of times you are going to hit in different times of the night and things. So that's you'll probably have to get over that somehow, because you know the longer term trading is going to be a little bit different. Yeah. But anyway, let me move to the dollar, because we are getting a little bit lower here in time. So let's do the dollar. The dollar is still range bound in my eyes in terms of where we've been to. 60-minute supply, 60-minute demand, and now it's kind of testing this area here. So those of you that got some shorts on, you are doing nicely, but now the dollar is we're in the middle of the range in general, I would just say, with the dollar. So nothing in great, but it is hitting some kind of a supply right up here. So so if you are in some kind of shorts, you may want to not alter, but you know, either move your stops or that sorts. But with that being said, so I am curious about one thing with so if you remember here with the Aussie, right? And the couple of questions were, you know, where's targets and blah, blah, blah. And so the first thing was, okay, we're hitting some close demand here. So you have to decide how you want to deal with that. But then the targets were down here and down here, right? So this was the first one because right before this candle there, and then before this overall zone there, that was the next one. And so, but you can see what happened that day, right? As you, and we had talked about this, that, you know, if you wanted to move it to break even or break even plus commission or this and that, then all of a sudden, a lot of times you're going to miss the big move. So I'm just kind of curious for those of you, I know some of you did take it, or if you want to just chime in on it too. If you did hang on to it, or if you did move stop during that time, or you know, or if it's fine if you're just day trading and you're taking it as a, you know, small areas in between, that's fine too, right? Okay, so I guess that means you're hanging on to it. Yeah. Or you held on to it for the target. Yeah, I mean, absolutely. But the whole thing too, but you can see a lot of times when you're at turning points, what happens is you are going to arrive with some kind of close area, and then you are going to test that close area against what you're doing. So that's what always makes it, because when you get the big move, that's when you kind of bulk up your trading account there, right? But then what happens is either you actually take the break even or you get out because of that. And that's fine if you're doing a lot of small term trading, but if you're trying to hold out for it, that's when kind of watching is hurt you, is what I said. Okay. Yeah. Yeah, so right. So you can see everybody's a little bit different personality. And I can understand too, I mean, usually on the fall down, it's a lot, right? Once this was the hardest part to get through, right? With the news and with the close demand and everything, that was the hardest part to get through. Once you got through that, though, you can see really nothing to test you, and then hitting down to target. So, yeah, but not the easiest for a lot of people. Yeah, not the easiest. Um, I mean, I wouldn't let that stop. A lot of times I don't. What we've done before is we've never let it stop us. You know, if it didn't hit target, if it's close to target, all right. So if it's close to target and it's before the weekend, then yes, I'll get out. But if it's still got pretty good room to run, and especially if you let me see if I see. Right? So let me see here. So especially if you see, well, it's hard to see at that moment, but you did form a little bit of supply here, but it's hard to see until really the end of the day that you did. Because usually that gives you a little bit extra confidence to kind of hang on there, right? But it's hard to know until you really, if I'm going for a bigger target, I try not to look at it because I know I will still try to do something. So I just try not to look at it. But, on the short term trading side, yeah, of course, I'm just going to get out the opposing area. But if it's for a bigger move, then honestly, the best thing is really not to look at it. But then you can always, if new supplies form, you can continue to move it down. So say, for instance, you say, well, I want to try for that second target, right? So you could take some off, and then you could say, well, I'm going to move stop down to, either here or here, right? This way you're risking, you're still making money, but you're risking something to see if you can get a little bit more. Right. Right. Okay, so now, and then the next area now that we're looking at, it will be down at the next 240, I believe. Wait, next 240. Yeah. Yeah, they do have a little bit areas, but the fresher area, just like the equities, will be down below. All right, so same thing for those of you that took it in spot. It's the same exact, numbers are a little bit different, but everything the same exact play out. Came off of the 240, bounced off into the 30. And what I'm seeing, so I think what we're going to do with Forex today is kind of let things play out, because what I'm seeing especially with the rest of the markets, as I look through them, is all we've done is, if you look at JY, all we did was go between our two areas. But the one thing you can look with JY is if we do see some weakness with bonds. So that's the only thing I would say look out, because all we've really done with JY is this is what we do. We came from the demand, we rallied up into supply. We're right smack in the middle here. So this is usually when you start doing your little small time frames that you get chopped up in, because again, you're starting to exhaust your both sides of supply and demand, and then you start trying to take little areas in between here. And can you see how it becomes so directionless that it's very difficult to, even if you're trying to day trade inside of here, it makes it extremely difficult. So what I would look out for this market is if we can see bonds get weak, can see JY get weak, then possibly bring some more strength into equities, if that's the case. So that's the one thing I'll look for in this market. And the same thing with the other, they all look pretty similar. Swissy gone absolutely nowhere too. All it's done too is gone from our same, and this has been going on since the beginning of April here, and we're already at the beginning of May, and this is all it's done is travel between our supply and demand. And you can see too, a lot of in between trading, you might get chopped up too as well, right? Because you might say, well, I want to take short, I want to take long, and you might get chopped up just because of that fact. But a lot of some kind of waiting for some things to try to break. The other one was Canadian dollar. We also came down from a long time ago. It took a while, but it came all the way down and now eventually hit our also a 240 zone and 30-minute zone. So right now, that's kind of what we're dealing with. You can see right here, 240, kind of same zone there, and then has a upper area on the 71.56 to 71.69. Okay, yeah, and if you're never sure of contracts, just go and check out what contract months, because everyone's going to be different in terms of like crude oil is going to be every month they change, and then the equities and the currencies are going to be, every 3 months they change. So just make sure, because usually your platform's going to tell you if you're in June, if you're in whatever it may be. So, and just make sure you have the right symbol month to the, a lot of platforms, they just change it for you, but then some of them you have to actually put in your month. So just know which month correlates with what you're looking at with the correct volume. All right. All right. No, I would say no. SF both sides is used up. I mean, they can both. One side is going to break, right? One side has to break. But if I would say you want to take fresh areas inside of there, I would say no, because this is what happens a lot of times is, well, first of all, look how deeply it went into it. The supply side, if anything, I would say is the one that's tested very lightly into, if anything. The demand side definitely is tested very deeply into. So I would say that, but then the only other part is a lot of times is you miss it, up, down, missed it. And then by the time you try to get in, it's like way down the road here. And then of course then it doesn't work. Then you get upset because you didn't get any of this, and then you're trying to catch the tail end of things. All right, so we will be back to tomorrow, and let me one more time. Like I said, the emails we have been reading, we are taking everything into, trying to make the best possible launch that we can for you. And so anything that you would like to know, just, let us know, and put in definitely for the priority access, still a little bit more time for that. So if you like it, hit the like, and if you didn't subscribe yet, please subscribe, and I will see you all tomorrow.